Good day. Ira Epstein of Linn Associates with your financial market wrap-up. And this wrap-up is for Monday, the 15th of November, 2021. Now, before I get any further, this coming Thursday, I'm going to hold my What's Up live webinar. You're invited to attend it. So if for any reason you find that you're not getting the invite in the mail, it's simple. You come here, just move your cursor up to the top of the page. You'll see an icon show. On that icon, click it, fill out the form. It will send you what you need. Please do me this favor. If you want me to cover any spiders or ETFs, because there's so many thousands of them, send me the notice of what you want me to cover. Let me prepare the charts, and that'll take care of it. Futures, you need not do that. We can cover it. I love to have them ahead of time because I know what's going on, but you can ask during the 20-minute webinar. And that's what it is. It's 20 minutes. I started at 12:30 promptly. It's going to be this Thursday, the 18th. I ended at 12:50 p.m. Central Time promptly. I do not record and post it on the website. I want you there. I want it to be interactive. A lot of people are saying, come on, Ira, post it. I'm not going to. So this is mine. There's no charge for it. I want you to attend it. Okay? So now in the markets. You know, we're sitting here. We're at some resistance zones in the market. President Biden today did sign, as you probably heard, the infrastructure package. He, as I understand it, has met with President Xi of China. They won't say what went on there and how it went, other than it probably went well. They're talking. But you do understand, China's not lived up to its treaty. I think they bought about half of what they said. On the other hand, this is a COVID-19. Come on, give them a break. And you'll say, nah, let's not do any of that. Well, the simple fact is when countries close down and they have a no-tolerance policy, do they need as much as they could have bought from us? Possibly. They're buying beans from South America. They could have stopped there. They have a treaty with us to have done it. I see both sides of the argument, is my point, and I try to be fair when I look at that. Energy prices, how far down? I don't think they're going very far down. I'm still of the opinion that the world economies are going to do better. I realize that we're getting COVID outbreaks, and I'm mentioning this because you got to take it into consideration. They're going to break out even worse throughout the United States, Europe, other areas where the weather is changed now. We're into the winter season. The doctors everywhere have warned us that the holiday season, the combination of cold weather, the flu, COVID, we're going to see more people get sick. The difference is if you've had the vaccine shots, getting sick versus going to a hospital or possibly dying, that isn't happening to the mass. Sick, how many of us get the flu? Unfortunately, the flu is a real killer. We all know that. But if you get vaccines, and I've been getting vaccines in it all my life, when you get it, you generally get a milder case. The year that I elected not to get it, to be a wise guy, I got so sick that I was really ill. Never going to do that again. So, yes, I take those shots, and I do it for me. I'm not interested about hearing all the stories, oh, you shouldn't do it, you shouldn't promote it. Listen, folks, I'm going to do what I want for me. It's the same right that those that don't want to get vaccinated have the right not to do it for them. All right. So as we look at the markets, we can see that it's pretty hard to say you have anything but a bull market here. You're even up in the S&P another 0.2% today. When you look at a daily bar chart, you can see how the market is hanging right in there. As we take a look, the pattern is one of higher lows, higher highs. That is certainly bullish. The market, what else is it doing? It is over the 18-day average of closes, which is over the green, the 100, which is over the 200. I mean, this has been a classic bullish setup. The resistance is 47.30.15. It may not get there. It might want to pull back and play around this 18-day average. I'm already getting people write me, Ira, there's not going to be a Santa Claus rally. Why not? You haven't given me the reason why it's not going to be. Are you seeing something in this chart that I'm not seeing? Possibly. Maybe you're that type of chartist. I agree we're overbought. I'm certainly not screaming at my subscribers, and I'll let you in on this, to buy the market here. No. I've been telling them when you lost the embedded reading, reasons to be out of the market, which they did. For if you were playing the embedded reading, it was a killer of a play. And when you lose it, and that's the enhanced Bollinger Band course that I have out there, it tells you sidelines. And that's what this work is saying. It's bullish, overbought, upside target still in place, and support back at 46.21 and a fraction. NASDAQ, same thing. Once you lose that embedded reading, the momentum's out of the market. Now, one of the things I've been writing about, and often happens, is when you lose that reading, you normally go back to the 18-day average of closes. You haven't done it in the S&P either. So I'm of the belief that unless you go up for a new high first, which I don't think's happening, doesn't mean I'm right, I expect that the play will unfold as I've seen it unfold time and time again. Prices will try to get back to the 18-day average to regroup. When I look at the Dow, it's the same thing. You have this play when you have this embedded reading. I'm looking for the market to run. Now look where it stopped. It finally got to the upper Bollinger Band. Watch this. You lose the embedded reading. If I create a course and I can't follow it, in terms of my teaching, in terms of my telling my subscribers what to do, I'm no good to them and I'm no good to myself. I follow. And I think the market here got close enough where I could say, okay, this one's pretty well reached its goal. But I can't say that about the Russell. I can't say that about the other markets. So I am looking for whatever reason's going to come about that magically these charts want to reach down for the 18-day average of closes. And if I'm right from there, there'll be something that happens bullish magically that starts the market off again to the upside for the Santa Claus rally eventually. Okay? Could be wrong. The naysayers could be the ones right. I don't know. It's only November 15th. Christmas is a long way off, but we do get the first range of shopping around that Thanksgiving period. Are you, by the way, is your email getting flooded, your inbox? I am out pre-sale on everything. What are they going to mark it down to get me to go into the final sale? I don't know, but there's some good deals. When I'm looking at the VIX cash, you got a lot of resistance up here. You have an uptrend, but you have a lot of resistance. Now, the market wasn't impressive today. It closed near the lows of the day. If it gets underneath 16.15 right here, yesterday's low, that could give you lower highs, lower lows. If this is going down, stock indices are going back up. We'll see which one goes. Right now, the bulls have the edge here, but I'm doing this. I'm scratching my head wondering just what's going on. Interest rates. One of the plays here has to be that you're looking at interest rates, and you got, to me, the bet is that they're going to creep to higher rates. That's what I believe is going to happen over time. Do they have to gallop? Why? They don't. Even though the Fed's going to do its tapering now, right? Tapering is not still putting money into the system. It's just cutting back the amount of money and the pace that it's being put in. Therefore, it doesn't have to gallop. But this chart's quite bearish. You've got lower highs, lower lows, and you're under the 18-day average of closes for the first time today. You haven't been there since back here, latter part of October. So it, for once, has thrown back the bearishness in the chart. So the curve yield to me is changing again. 10-year note, back into the bear trend. You have to take out today's high to convince me that's not the case. I admit it's oversold. No, I wouldn't be going, I want to get short the market right now. Not in an oversold condition, but it could go to 129.28. Why not? By the way, if you take out today's high, you probably trap the shorts and go back towards the 131.25. You got to do that within tomorrow or the next day. So it should be fun to watch Tuesday and Wednesday trade. Dollar index took off to the upside, but it's got, do you want to buy over an upper Bollinger Band? I know you're going to say yes. Go ahead and do it. I'm going to be that character that wants to take those bets from you because I say that the market will fall back to the right-hand side, probably lower than buying it over that band. Am I going to win every bet? For sure not. For sure not. That's a guarantee. Will there be enough in there to say I want to be the casino? Oh, yeah. And that's because 95% of the time the market won't stay under or over it, and the person selling it there, buying it there could do better. That's the point that I'm making. I attended a webinar I think it was last Wednesday or Thursday. I forgot myself. It's now there. I was still in Mexico. The webinar was in London, so that made for an interesting time difference. And John Bollinger was there, and I was listening to him, how he developed the Bollinger Bands, what he used, some of the formulas, and I was amazed at how many changes he had made over the years, like I have done in slow stochastics, and how I view Bollinger Bands. So it's very fascinating to hear the guy that wrote it, what he's doing with it. I was quite enamored with it. But the theory is you still don't buy over Bollinger Bands. That's the theory. Eurocurrency, lower highs, lower lows. Do you want to sell under a Bollinger Band? You go ahead and do it. That doesn't mean you can't go lower. It's not something I want to partake in because more times than not, you get thrown back. You sell it, you get thrown back. I don't want to be in that position. I'd rather miss the trade. This chart's getting very bearish, the British pound. Why? You embedded. So now you've got, if we take a look together, both numbers under 20 rather. Today, under 20. Come on, baby. Under 20 here. And one more day. Come on. There you go. Under 20. 3 in a row. Until the red closes over 21. Further rallies in this market, I think, are going to get sold by the pros. So that's what I'll be looking at. Bitcoin, I'd be careful now. I wanted the market today to be down to the 18-day average. I'm not sure I like it now. If it gets underneath now, 62,385, you could be going back to 59,435. If you're going to buy it, understand what the risk is. You're going to have about, as I view it, you're going to have about from 62, you got $1,000 risk in there. That's a big risk. In Brent versus WTI crude, these are the January differences. You're back down, and with the Brent falling under the 18-day average, the difference means they're crushing the differential. They're getting closer together. You can see how the market's not trending. You have a higher high and lower low. Do you want to sell the lower Bollinger Band? No. So I think the market just, if you will, it's marking time. It's waiting for something else. Same thing in the WTI crude. When you look at the heating oil, higher high, lower low. No, I have no interest in selling an oversold condition or telling my clients to under a Bollinger Band. Can it ride it and break further? Why not? But there's no edge as I'm seeing it on the chart setup right now. Nat gas, I'm looking for a bottom right now, right here. I said it last week, I'm saying it now. You're at the 100-day average in the lower Bollinger Band. Why you want to fight that combination going into the cold winter? You do it. I'll be on the other side waiting for the buy signal. There is no buy signal yet. There is a signal not to be short, and that's just as important. Remember, I'm going to hold this coming Thursday, the 18th at 12:30 p.m., the live webinar. You need to get the link to get in. You need the user ID and the password. How do you get them? Just click up here. Take your browser, click it. You'll see an icon appear. That's what you use. I'm Ira Epstein. You have a good day. And when I say use, you fill out the form. You'll get sent everything you need. If you have questions on spiders or ETFs, please send them to me ahead of time. There's thousands of them. There's only 40 futures markets, roughly, that I follow. There's thousands of spiders ETFs. Give me a chance to set up your charts, and that I'll do it for you. I'm Ira. You have a good day.